American friends, market participants and enthusiasts right around the world. Thanks a lot for joining me as at this Tuesday afternoon market recap. It has been that of an abbreviated day's worth of trade. This is in observance leading into the US 4th of July holiday being on Wednesday. I wanted to take the time first of all to wish all of my American friends around the world a very pleasant, happy and joyous day tomorrow. The markets will be closed on Wednesday, so we are looking at not only an abbreviated day's worth of trade today, but also a shortened trading week. Now, really, this market update today is going to be a recap of both Monday and Tuesday. It has been a relatively inactive sort of beginning to this shortened week's worth of trade. Today's candlestick is relatively interesting. I am going to touch on that. This is the chart of the Dow Jones Industrial Average. You can see in the top left-hand corner of my screen, the Dow Jones Industrial Average, and in the top right-hand corner, you can see we closed down 132 points. What makes this interesting is that this is once again another two-day reversal pattern. This is what we call that of a dark cloud cover. Let me just walk you through what happened during the intra-session movements today. We gapped up originally to begin Tuesday's session. We tried to push up and at least retest the highs that we priced in last Friday, but we actually reversed. We were rejected up and around this 24,400 area, and we closed down here at 24,174, down 132 points. Again, just to reiterate, this is that of a dark cloud cover. This is a very bearish continuation signal, and even if you look at the parameters of what's been happening over the past 1.5 weeks, it really looks as though if we just connect some of these higher sort of upper wicks and also some of this lower structural support that we see, it does look as though that we may be potentially setting up that of a very slight sort of wedge pattern, or at least a continuation pattern, which is suggesting that this move that we have been in for the past 2 to 3 weeks may continue if we do see the definitive break of Thursday's candle last week. What we can take away, however, from the first 2 sessions of this week is that the markets are still relatively weak. We're not seeing any true demand, or at least bids on this market, at least by the bulls. And again, we're coming down to the question, and this is the very important question that still is yet to be answered by active market participants, is whether or not this pullback that we have been in has concluded, if we are essentially setting up that of the next higher sort of support area, at least on the S&P and the NASDAQ, or are we again mid-phase? Now we're going to see the bottom, so to speak, temporarily fall out of this market as we come all the way back down and retest some of these past macro support areas that we've established in the months of February, also in March and April, a couple of consecutive retests, May, and then of course since then we have been trying to do our best in terms of a trending market to come on all the way back up and close these open windows. So it is rather delicate, it is interesting, and what I can tell you is that since Monday last week, so we're bordering on right now, 7 sessions of trade. What I can say is that I haven't opened a single individual position. I've simply been watching this market from afar and just waiting for this market to really move back into synchronicity with counterpart markets, say for instance the Dow and the S&P or the Dow and the NASDAQ, until they collectively move into a logical area of either support or resistance, or at least until the majority of stocks on our list are gathering, at support or resistance, until we begin to consider take any new swing trades moving forward. At the moment, the markets remain mixed, and again, I'm just going to highlight to you as at the close on Tuesday. Now, this is the S&P 500 really since last week. We've been toying with this bullish uptrend, and it's been a question, well, are we going to hold this, or are we going to see that of this support area taken out and broken? And really, even as at the close on Tuesday, we still don't have an answer. What I can update you on is that, look, today we do have another dark cloud cover. That's the difference between Monday and Tuesday. You can see we gapped up again. We sort of retested the highs of Friday's candle last week, that being very similar to or very close to that of a shooting star. And we've pierced at least halfway into Monday's candlestick. So again, we are seeing continued weakness, although the market itself isn't rallying, nor is it seeing any material fall. The candlesticks are still suggesting, again, mixed with the shooting star and mixed with some engulfing candlestick patterns, of course, this big gap that we saw 2 weeks ago now, that the market still remains relatively weak, and there is still the expectations and the probability that we are going to break below that of Thursday's candle as well on the S&P 500. Now, what we do have, however, is that if a miracle, or if a very short-term quick miracle occurs and we do see stabilization here in price, like we are somewhat seeing at the moment without that true commitment to the downside. Say, for instance, we reverse and we do hold this most recent consecutive series of higher lows just here, but then we do have this bullish trigger sitting on our screen at 2,767. I'm not really getting too excited about that entry as at the close on Tuesday, but we're just going to have to monitor how the market opens on Thursday and see how we close into the week or around this most recent week out. If I can pay attention or bring your attention to the NASDAQ as well, again, a very similar candlestick, that of a dark cloud cover. We got the gap up during Tuesday's session. Everyone, again, relatively excited, but that fizzled, it faded, it was rejected. In fact, we almost established that of just a shaved top where we didn't see any advance above really the first gap up to begin today's session. Again, we've closed and pierced at least halfway into Monday's bullish candlestick. So collectively across these markets, we are still seeing weakness. We aren't seeing really definitive signals of strength at the moment, and it's something that we have to monitor. The NASDAQ, really since I think 3 Tuesdays ago, I put out a YouTube video saying tech is cooling. And since I spoke about that, tech has pulled back and it's still holding back down towards or back down towards most recent swing lows as well. So again, I'd encourage you to think defensively. I would encourage you to not really go out looking for a bunch of new trade opportunities or be in that sort of mindset to allocate new capital into any new positions. Really at this particular point in time, the markets are mixed. And when they are, generally you need to wait for clearer signals, one direction or another. And when those signals do present, I will bring that to your attention, but for the time being, I think your mind and focus should really be somewhat away from the markets. Not to say that you shouldn't be doing analysis on the markets or looking for opportunity, but this is a process, and it just takes time for the market to move back into a sort of an alignment which makes sense, technically speaking, where you can say definitively, well, this is the trade setup, and this is what I'm going to do. This is my risk, and these are my targets. And at the moment, this market is rather bifurcated, is sort of 50-50 in the approach, whether bullish or bearish. And when we do find ourselves in these types of environments, my personal opinion, I've always felt it's best to more or less leave other people to battle it out and to potentially whipsaw themselves into a lot of pain and short-term disaster. And then we'll just jump in once the majority of people and majority of active market participants settle on that next major swing in price moving forward. Now, if I can continue with the discussion into the Russell, you can see we're seeing a little bit of a bounce here. This is interesting, but at the same time, this looks like a bear flag. So this little gap here, this little bounce that we're seeing, it is falling. Or at least bouncing on decreasing volume, so to speak, and there is a good chance that we are going to at least come back down to roughly 1,600, and then this is going to open potentially the doorway for the move to take us on all the way back up to roughly 1,730. That's the sort of round number that I've been working with, so to speak. But you can see on my screen here, it's 1,726. But just understand that we are probably going to be in a continued environment of volatility, and that isn't really all that conducive to legitimate swing trades. We are going to see obviously swings in price, but as a whole, at the moment, really the context isn't set all that well for us to jump in immediately or as at the open, so to speak, on Thursday into a bunch of new trades. So that's just the reality of what we're looking at the moment. Now, if we bring up the Dow Jones, transportation average, you can see again, this is looking like that of a bull flag. If my screen wants to work with me, you can see this little continuation of price action short term to the upside. Over the past 4 sessions, we are seeing a shooting star candlestick. This was after that doji candle. We have almost out of a long day Morobozu on Monday. Not on the most comforting sort of signal and volume, but today we have an inside day candlestick, not the most strongest of reversal candlesticks, but in context of the past 4 candles, it certainly leads me to believe that we are potentially going to come back down to at least 10,000 on the Dow Jones transportational average as well. So that's a bit of a recap when it comes to the US market indices. I can also bring up the US dollar. The US dollar is still holding up, or at least finding resistance around that 95 handle. Today we saw another pullback. We're at 94.61, but we don't have that definitive turn yet. I assume that we're printing the structures, and essentially we're working with the parameters of both sort of a bearish entry in the future and also the potential of a bullish continuational entry in the future. But at the moment, we've been looking at the US dollar and just really sort of considering that of continued volatility. And that's essentially what we're seeing. You can go all the way back to the late stage of May, where we printed up more or less at the current price where we're closing in the second session of July. And really the net movement is unchanged, if not slightly negative. But within this period of about really 1 1.25 months, we've seen some pretty abrupt movements or volatile movements, both up and also down. So we're going to have to monitor this moving forward, but I think there is a lot of risk up here for dollar bulls. Time will tell, maybe, who knows, potentially we might take bullish trades in the future, but at the moment it is looking like a relatively strong resistance area, and this is also in combination with these oscillators moving back up into overbought as well. So we do have some slight divergence. We're just going to have to monitor this. We're not jumping out into sort of fading the US dollar at the moment, but it does set sort of the template for our understanding of GLD and SLV. Now, I was going to bring up SLV to begin with. Let's just have a look at gold. Gold today jumped First time in quite some time where we've actually seen that of a decent gap. This is somewhat looking like that of an sort of a Morningstar reversal. I'm not going to call it that because this is not the candlestick that you want to see in terms of the star. This is sort of a long day Morobozu. But you can see we have an original gap up, but at the same time we do have an upper wick. So this is coming, or at least showing up where that declining 10 exponential moving averages. Simply, I'm just following this now. I'm just watching it, and more so watching that of the US dollar to see whether or not that 95 handle holds, or whether or not we are going to see the continuation of the US dollar higher, which is going to be bearish for GLD moving forward and also for SLV. So it's positive to see a little bit of a bullish activity, so to speak, on GLD. Maybe it is just off from those oversold parameters that we've been at for quite some time. But we're just going to have to monitor this. There is no definitive signal on gold at the moment, but at the same time, SLV is getting awfully close down to what has been a very strong area of support in the past. Around that 1420 or 1481 area, you can see going all the way back to November and December 16 into the mid part of July, we had that, or at least 2017, we had a consecutive sort of retest, again in December 17, and most recently, as of Monday this week, going back to July 2018 as well. So interesting signals, interesting times for SLV. It's going to be very interesting to see whether or not we do crack this area, or whether this is going to be that final sort of support area that holds. If I go to the weekly chart and just bring up the Bollinger Bands, I wanted to very quickly show you this. We do have a squeeze on the weekly chart, which is very rare for SLV, and also we've got what appears to be potentially that of a false break to the downside. And in the past, generally when you see these types of movements, I know it's only 2 sessions into what is going to ultimately be 4 for the week, we can see a very strong reversal off from this lower Bollinger Band. So be mindful of that. We are in some form of a triangle as well. And what I'm trying to suggest right now is that if this is some form of a whipsaw to the downside, and it's interesting because we did see gaps, 2 consecutive gaps up on SLV and GLD during Tuesday's session, which makes a lot of sense. Well, then we could see a very abrupt rally back up to resistance, but who knows, if we start overtaking this resistance, we could see some form of really parabolic rise on commodities, but that is going to be somewhat dependent on what the US dollar does as well. Now, let me have a quick look into some of our top 12 stocks. At the moment, you can see stocks are largely moving nowhere, and it's no surprise that they're doing this. We've sort of had this mindset for really since last week, the beginning of last week. In Pro 2 weeks ago, we had a really good comprehensive discussion on what the actual market indices are doing, and it's led us to believe, really, again, just to highlight this, it should be that of a sort of defensive mindset at the moment, and that really hasn't changed. And it's just allowing yourself or trying to be sort of content with the discipline to be patient. And that's really all this is. It's just a game of just waiting this out and waiting for the true signals until we act. And that time is going to come. I cannot tell you definitively when it is, but it is going to arise. Now, if we look at Apple here, you can see that we have an outside day engulfing candle. This is sort of like a tweezer top reversal. It does, of course, constitute that of, again, weakness moving forward. So although we aren't breaking below macro support, at the same time, we're not seeing truly bullish signals on Apple. Simply have been speaking about this and saying just leave it. And really, if you take into context where we have been since the 19th of June, here we are, today's date, obviously being the 3rd of July, we've largely just moved nowhere. I mean, absolutely nowhere. So you're not missing out on any trades whatsoever, even though we are relatively inactive when it comes to individual trades. You've got Amazon coming back up. We have closed the gap. We closed it on Friday. We've now once again reclosed it. I mean, we've somewhat closed it for the second time, although we don't need to see that, but you get the picture anyway. And again, we've got that of a dark cloud cover as well. So this is looking like a bear flag. It's looking like weakness is on the horizon for Amazon, and it would be really healthy for this to come all the way back down to 1,600. That's going to be my target on Amazon, and nothing on that has changed at the moment. Boeing Airlines, absolutely no man's land, not really helping us either direction. No point actually looking at that stock. We've got Baidu again, more or less back testing what appears to be that of this bullish trend line. If we have broken down below this on, what was it, Wednesday or Thursday last week? I think it was Thursday. Yeah, it was Thursday. If we are seeing the back test, I mean, this could be it right here on 250, but at the same time, really not gravitating towards any trades whatsoever when it comes to our top 12 individual trade list. Although I can make the picture and the argument more so for a bearish sort of movement, at least immediate future, doesn't mean that I'm jumping into a bunch of bearish trades. The market, the macro trend, so to speak, is still bullish. And the charts, it's really sort of pick and choose when it comes to the most bearish of trades. Obviously, Tesla's been under extreme pressure. I'll touch on that soon. But even with Caterpillar, you can see it's holding below 136.80. I'm not in this, just simply following this because, again, I think we've got a great opportunity down here at 130 if we do come on down and tag that level moving forward. I will give you updates, obviously, in the weekend with Caterpillar. But that is looking exciting. We've got COP today. We spoke about this over the weekend. Again, pay attention to this resistance area today. Surprise, surprise, we have a massive shooting star candlestick, a massive shooting star candlestick. Let me just zoom in and show you this because it is a very important signal. It's also a very strong signal as well. I mean, that is exactly what we spoke about. And as at Tuesday, it has shown up. So, I mean, for those of you who trade the market's intra-session, COP looks like an absolutely delicious short, more or less the intraday low as at Tuesday. So come Thursday, once this starts to crack Tuesday's low, today's low, this is going to be potentially a dramatic fall back down to 65.50. So there's some opportunity there on COP. I myself, not really all that interested in it. I don't really like the reward profile compared to risk when it comes to, or at least the definition of that through the perspective of a swing trader. So I am a swing trader. That's what I talk about. That's what I preach. And I stay away from intra-session trading. All right. That's just simply what I do. It's not what I do personally. So I don't like to talk about those types of setups, but very easily you can observe them and just point it out when you see it anyway. If other people want to take up that opportunity, go for it. We've got CVX. Look at this, largely going absolutely nowhere. So again, you get into these movements in the market where stocks, they don't do much. And I've been trying to be sort of delicate in my approach to revealing this sort of attitude or this type of sentiment we find ourselves in. But CVX really sums it up as well, going absolutely nowhere. We've got Google. Again, I've been speaking about Google for 2 weeks now, saying it's probably best to leave this alone. It's probably going to be an absolute nightmare for people positioning themselves both long and also short. And you can see, just looking at Monday and Tuesday, we've got a long day Morobozu, a bullish candlestick, followed by, I mean, that's almost a tweezer top, but it does somewhat fit the category still of a dark cloud cover. It really has been a dark cloud cover sort of Tuesday for us, but this is just whipsaw all over the place. I honestly stay away from these stocks. At the moment, they are not looking good. They are really not looking good. We've got IBM trying to retest this 140 handle. We closed down below it once again, 139.57. Just leave it. Simply leave it. We do have earnings coming up for IBM soon, and at the moment, it's really not conducive for a long, potentially a short, but at the same time, the markets are still trending bullish. As hesitant as I am to somewhat say that still, they are still technically bullish, but short term, they are weak. All right, if that makes sense. Netflix, again, more or less moving sideways, very similar to what we're seeing on Amazon. We're seeing this kind of slow grind higher, but at the same time, it certainly is very shaky. And we've talked about some candlestick patterns in the past. We've spoken about chart sort of patterns in the past. We've spoken about island reversals and gaps, what these gaps mean. And we've just seen the continuation of bearish candlesticks. So this has got so much sort of bearish activity written all over it. There's a lot of people positioning themselves, obviously, to short this stock. You can see it in the makeup, the composition of what we've been looking at towards the back end of June. And I think it's only a matter of time until the bottom falls out of Netflix. And we should see Netflix run back down to 330. Again, counter trend. If you want to take that trade, understand it comes with it. What comes with it, pardon me, is additional risk. Now, Tesla, you can see here, this has been this period here. I mean, for a while. I mean, in the past, let me just go back to the beginning. Tesla's been phenomenal to trade, and I still think it's going to be a phenomenal stock to trade. In fact, if you took the short at 321.60 today, you're sitting there with a big smile on your face. You've made pretty much $10 in the space of one trading session as a swing trade with options down to this most recent support area. So you're sitting there hopefully relatively happy. I can say I'm not in this stock because it has been rather volatile, and a lot of the technical sort of analysis has been suggesting that we are to see weakness, but at the same time we have been seeing that of some short-term bullish moves to take us on that back up and retest some old support areas as new resistance just at higher levels. Now, during this entire process, we've just been waiting for this to essentially reverse, and that's exactly what appears to be happening. It looks as though we have that of a double top now. We've broken the neckline, and I mean, I've been calling for Tesla, so to speak, to come all the way back down to more or less 250, 240 per share. If this is going to be a legitimate sort of intermediate continuation of the primary trend, or at least this most recent trend, which has been in effect since 2011, and of course more or less the retest of this critical pivot as sort of old resistance or old support to new old support to new resistance, well, it makes a lot of sense that we are going to overshoot both this low and potentially this low over here as well if we see the true commitment and movement, and also a deeper correction in the equity markets as well. So there is a lot of bearishness, sentiment, and of course candlesticks. Just the technical chart is broken, so to speak, on Tesla. This is not a buy opportunity on Tesla. Don't think that you're getting it on a discount up here at 310 as opposed to 360. This has got the potential to fall like a stone moving forward. And I just wanted to give you an update on that as well. So that's going to do us as at this Tuesday afternoon market recap. Again, to all my American friends, I wish you a very nice and pleasant 4th of July holiday tomorrow and Wednesday. And I'll see you later in the week when the markets reopen, as at the close on Thursday. Who knows, even potentially and possibly as at the close on Friday. I'd encourage you, if you have any questions, please email me, success@pivotpoint-trading.com. Until next time, everyone, I'm going to say farewell. It's James on behalf of Pivot Point Trading. All the best. Goodbye.